Hello everyone, good morning.
Morning, Siddhi.
I think almost people have joined the session. So we will just start with our day one of our part one individuals. Okay. Let me quickly share my screen. Okay. So, first of all, I'll just explain the syllabus of our part one. Those who are very new to this course, they might have not gone through the topics or the syllabus of the part one. And those who are already studying, they are aware about the topics and chapters and everything. Okay. So, okay. For part one, everything is about 1040 return, that is individual taxation. So you are going to understand from the point of view of a individual person. Okay. So the book which we are going to use is my own handwritten, like not handwritten, but my own book which we are going to launch for 2023 tax window. There is no claim book, there is no fast forward book, there is no other this book which we are going to use. This is my own book which I'm going to launch for the 23 tax law. In this book I have set a sequence in such a manner that the topic which we are going to do will be linked to the previous topic. Okay, you might have seen my revision lectures also, that individual taxation basic topic was linked to the credits. The reason for that was the dependent status. Once you understand the criteria for dependency status, all the criterias are applied as it is to the credits chapter. Okay, so here the sequence is given in such a manner that all your basic topics will be linked to the next chapter. Okay, and second thing is, after each and every chapter, everyone please mute yourself. Yeah. After each and every chapter, we are going to do the MCQs. Okay, you will be given the MCQs on the same day. Let's say, for example, today we are going to take the first topic. Okay, 1040 filing requirement, and tomorrow we are going to complete the filing status, and the day three we are going to complete the dependency status. Okay, so each day you will receive the MCQs for same topic which we are doing on that day. Okay, so this is the sequence of the chapters. First we will take the filing requirement and filing status, then we will jump to the credits chapter. Okay, it is easy to link the criterias from the other chapters. Second thing is gross income. So now understand one thing. In US taxation, we have two types of gross income. One is earned income and second is unearned income. Okay, earned income means where you are actively involved in the business or earning that money. So that is earned income. One example I'll give you is salaries, wages, commission, tips, where your personal involvement is there for earning that income. Okay, unearned is very simple. You are just using the money to earn the extra income. That is passive income, I can also call it as. And the example is interest, dividend. Okay, for earning dividend income, you're not involving yourself. You're just putting some money in a corporation. They are earning and passing the income to you. That is dividend income. That is known as unearned or passive income. So the gross income will be the combination of earned and unearned income. Okay. Then I have taken a sequence of whole 1040 form, that is schedule C. Okay, business incomes. Then we have a schedule D. While understanding schedule D, we will have to check the sales transaction of property or any shares and securities. Okay, all the capital asset related transactions will be covered in schedule D, right? um, Rental income cannot be categorized as earned income unless and until unless that person is 100% involved in the business. We will see the criteria in study unit number 6, which is Schedule E rental income, where number of hours participation you need to check. If it is more than 750 hours, then you can categorize it as a active income. Okay, else it will always be a passive income. Then we will see the loss limitation. So once, see, if there is a business, there can be a profit also, there can be a loss also. So if you have a loss in a schedule C, or you have a loss in schedule E, how it will be carried forward. So that will be done in study unit number 7. And then we have the important one is adjustment to income. What do you mean by adjustment to income? Over there, IRS will always provide you some benefits. Okay, if you have earnings, if you have income, they will give you some benefits if you invest that money in some specified categories, or you are going to expense the money properly. Your earned income, if you're going to expense it properly, you can receive some extra deductions. Okay, this is a kind of deductions, I can say, that is adjusting your income by reducing it from your gross income. So whatever study unit 3 we are going to do, based on that we will see what adjustments can be done in our study unit 8. Okay, this is related to educator expense, IRA topic. Okay, IRA, when you contribute into IRA, you receive some deductions. Okay, and when you take a distributions, it will be taxable. So whenever distributions is received, we'll make it taxable in our gross income, but when you make a contribution, it is allowed as a deduction in our adjustment to income. Okay, then we have some health saving account or some investments. If you are going to make, you receive the adjustments, or I can say you receive the deduction, right? This can also be called as above the line. I'll come to this point why it is called above the line in some time. Okay, next is schedule A. Now schedule A, see, you have the deductions, that's fine. You also have some extra deductions, that is itemized deductions. Itemized deductions are allowed for your personal expenses. No one will allow any deduction for your personal expense except for 5 kind of itemized deduction, that is your schedule A. Okay, let's say you have incurred some medical expense, you have incurred some you have paid some taxes to the government, that is state level tax. Okay, you have paid interest expense, like you are incurring interest expense for your residential home. Okay, let's say you have taken a home on a mortgage, you're paying a mortgage interest. So can I say it's a kind of personal expense because home is your personal residence, but still IRS gives you the liberty to deduct this 5 kind of expenses in your tax return. Okay, you make some charitable donation. Now second thing is, this standard deduction and this itemized deduction both cannot be taken at the same time. Either you can take standard or you can go for itemized. Okay, here it should be all. Okay, that we will see in study unit number 9. And then we have some qualified business income deduction. So this is going to be taken by someone who is having a business income, and that business should be qualified. Example is, a person is having a sole proprietor business, or a person is having income from a partnership firm or a S corporation firm. Like, this income we are going to first analyze whether it falls into category of the list of criterias given by the IRS or not. Okay, whole part 1 is about remembering the criterias. If you fulfill the criteria, you get the deduction. If you fulfill the criteria, you get the credits. Okay, now first step, in each and every topic we will first see that is the criteria fulfilled or not. Second, we will see that what is the limit. Okay, and if there is a limit, is your AGI. AGI is what? I'll explain you that. is your AGI, adjusted gross income, is within the limit or going above the limit. If it's going above, whether you need to phase out your deduction. Phase out deduction means reduce your deduction or reduce your credits or not. Okay. And the third is any consequences. These three things you have to keep in mind in all the topics, all the three chapter, like all the part one, all the chapters. Okay. I'm going to teach in that sequence only. First, I'll explain you on your 1040 form where this deduction will affect or where this credit will come into picture. Okay. Then I'll explain you the criteria. Criteria means what kind of person can take this deduction, what should be their income to claim this deduction, and everything. Okay. Second, I'll explain the limit, if any. And this limits will be obviously based on 23 tax law. Right. And third is consequences, means let's say there are some exceptions or any criteria which you need to keep in mind to take the deduction, that will be explained in third step. Okay. So even if I forgot to explain you any of this step, you can ask me in any topic. All our topics will flow in this sequence only. Okay. It will be easy to remember it. And then last one will be computing your estimated tax. Okay. Just like in India, we have advanced tax. Same way over there, we have estimated tax. Now, 2022 tax return is already filed. As soon as you file the return, there will be a generation of a voucher. This voucher is nothing but for paying the estimated taxes for the next year, that is 23. How the estimated tax is calculated, that topic is there in our study unit number 11. And the 12th is gift and estate tax. Okay. If someone is going to give some gift to their friends or relatives or any person, and this amount is above a particular limit, okay, annual limit, then you have to file a gift tax return. Or if a person dies, right, all his asset, all his income and everything will get transferred to a fund that is known as estate. So for that we will see the gift and estate return. And the last one we will see is regarding the foreign asset. Okay, F bar and specified foreign asset. Being a US citizen or a US resident, okay, if you're going to earn any income outside US, that income is your foreign income. How you are going to report it in your F bar, and what are the criterias and limits of the taxation. Got it, guys? I hope the syllabus is clear to everyone. Those who are already pursuing EA, they might already be aware about it. I have just arranged the sequence in my book. Those who have joined late, I'm just explaining to them. We are going to use our own book. We are not going to use any of the other study material. This is my own book, which I have designed in such a manner that the learning pattern should be very simple. Okay. Once you complete this first chapter, the second chapter is linked to the first, third is linked to the second, like that. Okay. Got it, guys? So any question, any doubt till now, else we will start with our first chapter, that is filing requirement. Okay. Today we are going to do this one, filing requirement. Any question, guys? Anyone? Okay. So let's start with our first chapter, filing requirement. In that, this is just a basic formula, guys. Once you understand this formula, it will be easy for you to understand the sequence. Okay, this is your 1040 return sequence. This is very simple. Take the gross. Yes. Everyone, please keep yourself on a mute. Okay, yeah. So take the gross income. Okay, this will include what earned and unearned income. After that, you can take some adjustments, because as per IRS, they will allow you to take some adjustments. Okay. After that, you will receive an amount that is adjusted gross income. Once you reduce your adjustments from the gross income, it is adjusted gross income. Then we have is standard deduction. So for standard deduction, it will depend on the filing status. If a person is going to file as a single, their standard deduction will be 13,850. If a person is filing head of household, it will be 2,800. If it's a MFJ or a surviving spouse, it will be 27,700. And if it's a filing separately, it will be 13,850 again. Okay, so these are the 23 law limits. You don't have to remember the limits. Wherever it is necessary, I will ask you to specifically remember it properly by marking it in a red, bold, highlighter. Here, no need to remember the standard deduction limit. That's fine. Okay. Then we have is itemized deduction. So what usually people will do, they will see what filing status they are going to use. The highest highest benefit for the filing status is MFJ. That is married and filing joint return, or any surviving spouse, okay, widower, I can say, they can get a highest deduction. So we will check that what is the standard deduction applicable, and if they have incurred some personal expenses like medical expenses, charitable contribution, interest expense, right, real estate tax, all these expenses, if they have incurred and they are going above 27,700, we will opt for itemized deduction. After reducing either of this, you will get a taxable income before QBI. And then you will reduce the QBI, you will get a taxable income. So I'm just explaining you the sequence. What thing will come at which line? Now this, as I mentioned, adjustment will also be called as above the line deduction. Okay, so above the line means this is our AGI, adjusted gross income. You have to understand this thing, because based on AGI, so many limits are set in our credits chapter. When you do the credits chapter, the next chapter is credits, you will understand that uh, each and every limits are linked to the AGI. See, if your AGI is up to 10,000, AGI is more than 10,000, then this much credit is applicable. So what exactly is AGI? All your earned plus unearned income minus your adjustments. Okay, what will be your adjustments? You can just refer the list over here from study need number 8 that is given over here. Okay, yes, any question? Rahul, any question? Okay. Next one is next one is after you came to a conclusion that this is my total taxable income, then there is a calculation of federal income tax. Okay. Now this tax is again based on your filing status, and a percentage will be there. A tax rate will be there. It will be based on your total taxable income. Okay, whatever is your taxable income, the slab rates are given for each and every filing status. Again, no need to remember those tax rates in your EA exams. In your part 1, it's wholly MCQ based. They don't expect you to do the calculation part. Okay, they don't want you to remember the calculation part. You have to remember three things: criteria, limit in some of the topics, and consequences or exceptions. Based on this three only, they will play the MCQ. Okay. Next one is, after you decide what is your actual tax liability, from that again you will get a credit. Credits means uh, some benefits is given to taxpayers. Let's say if the person is having two child, three child, so there is a child tax credit. There is a dependent care credit. If you are taking care of your dependent, then there will be some credit given to you. Okay, and that credit will straight away reduce your tax liability. Adjustments or deduction will reduce your income. They will not reduce the liability. Okay, clear guys? After that, any other taxes which is applicable will be given over here. And there will be any payments. Let's say you paid the estimated taxes already, or your employer has paid some withholding taxes already, so you can take the deduction for those advance payments. Whatever is the remaining will be your tax due or the tax refund. Okay, either you'll have to pay or either you'll get a refund. So this is the a simple sequence of a individual tax return. In individual tax return, everything will be in this formula. You have to if you want, if you can remember this formula, the whole understanding will be very easy. So make sure to understand and remember this formula. The next formula I'm not going to take right now, because as and when we complete the syllabus, you'll able to understand that. Okay. So coming to the filing requirement for the individuals. Being an individual, who should actually file the tax return? Okay, first you need to make sure that the client who is providing you all the documents and everything, either he is eligible to file the return or not, right? So who must file? A taxpayer must file a return if his income is equal to or greater than the sum of these two. Okay. In India, what do we say? If your income is more than basic exemption limit, then you have to file the tax return. Same way over there, basic exemption limit is categorized into two things. One is if their income is more than standard deduction. Let's say I'm filing as a single taxpayer. So what is the limit for single taxpayer? If my income is more than 13,850, okay, I'll have to file the tax return. Or if my income is less than 13,850, I don't need to file the tax return. Okay, it's not mandatory for me if my income is less than this. Okay, now let's say my age is more than 65 years of age. My age is more than 65, or if taxpayer is blind, okay, then there is a additional deduction. So I will not see only this limit, I will also see the additional deduction limit. That is very simple. If a person is 65 or older, for them it is 1850 for unmarried, and for a married it will be 1500. If a person is both 60 more than 65 and a person is blind also, okay, this is for per I can say criteria. If a person is just a 65, more than 65 years, okay, now understand the wordings. In EA exam, the wordings are important. It's mentioned 65 or older. Means even if a person is of exact 65 years, he can get a additional deduction. Standard deduction is fine, 13,850, 2,800, that is allowed. Along with that, they can get a additional deduction of 1850 if unmarried, and for married person it will be 1500. This is per person, per criteria. Now let's say person is 65 and older also, plus blind also, then this deduction will become twice, that is 3700, and this will also become twice, that is 3000. Okay, now let's say in case of married person, this is a per person amount. Both the taxpayer and spouse, both the people are either 65 years or older or blind, this will become multiplied by 2, that is 3000. And if both are 65 plus blind, so this will become 6000. Okay, this you have to multiply by 2 because this is per person. Clear, guys? So you have to check if you are already having a this standard deduction, okay, plus additional standard deduction. If it is more than the limit specified, then you need to file the tax return. Okay, yes, if self employment is if you are in a self-employment and your income is more than 400. Self-employment means if you're a sole proprietor. If you're running a business as a sole proprietor, you need to check that what is your income. If it's going more than 400, then you need to file a tax return. Okay, because as soon as your income goes more than 400, you have to pay the self-employment tax. Okay, that we will see when we do the Schedule C topic, because this is related to Schedule C. There we will see the details, how to calculate SC tax, what exactly it is. Okay, it is a replacement of a payroll tax. If see, you are self-employed means you're not employed anywhere. So instead of paying payroll tax, you have to go for a self-employment tax. Okay, that we'll see in that chapter later on. So right now, first one is very much clear to everyone, that you have to check the filing. To check the filing status, you need to check the first one is standard deduction. Now, only these two criterias are not there. These are the basic criterias. Apart from this, as and when we do the other chapters, there we will highlight the things that, okay, this person needs to file the return, this person needs to file the return. Okay, who must file the return? This is the basic criteria. Right now, when to file the return, the due date is very simple, 15th of April. Okay, or I can say 15th of fourth month from the end of the tax year. In US, we are going to use a calendar year. So from 1st Jan to December, okay, 1st Jan till 31st December, you have to check the 4 month from here, that comes as 15th April. Now, what if you do not file the return by 15th April? You have one option. You can take a extension for 6 months. Okay. So you have the time period till 15th October to file the return. But remember one thing, when you are extending your deadline before this 15th April, you need to pay all your estimated taxes, all your tax which is coming on the tax return. Okay, so you need to file the estimated tax or whole tax before 15th April. Okay, so then after paying that tax, you can file an extension form. You will receive a 6 month automatic extension, that is till 15th April, for those taxpayers who are unable to file the return by 15th April. Okay, now the automatic extension is not an extension for payment. As I mentioned, whatever tax you are going to owe to the IRS, you have to pay it before 15th April, and the filing form for our extension is 4868. Okay, now second thing, I'll just let you know that whenever we study something on the same day, use the last page of your book. Whatever form numbers are coming, whatever limits are coming, I'm talking only for the form numbers and any limits and any due dates. Okay, this you can just write it down on the last page of your book. So first thing which we understood today, the filing date and the automatic extension filing form. Whatever topics we will do in credits chapter, specifically in credits chapter, there are lots of limit and lots of criteria, phase out, form numbers are also there. So I will explain you the form numbers also. Please make sure to write it down on the last page of your book. Okay, this is the sequence we will follow in the upcoming sessions. Payment of the tax needs to be done, okay, till 15th April. Got it, guys? This is a very simple thing, like what is the due date, who can file the return, and when you need to file the return. So what are the filing status? Now, the most important topic of our syllabus part 1 is filing status. Once you understand what is the filing status, then only you can take the deduction accordingly, take the credits accordingly. For example, I'll tell you one example. If you're paying a dependent care expense, okay, it should be paid by a married person. Okay, if you're filing a MFJ and both the taxpayer and spouse are a working professionals, Due to that, they are not able to take care of their child, so they are putting their child in a childcare facility, right? So this is what you are going to understand. Like, persons should be filing a MFJ. Now, who should file MFJ? What are the criteria of MFJ? What is a single filing status? Everything we are going to understand right now in this topic. Okay, before moving to the next thing, any question anyone is having, or any doubt or anything? Okay, next is filing status. If a person wants to file as a single, what is the criteria? A person should be unmarried during the whole year. But how you will check the exact timing of this criteria? It should be on 31st of December 2023. Okay, we are going to file a return for which year? 23. So exactly on the last day of the tax year, you need to check what is the what is the marital status of that person. For the whole year, if a person is married, on last day the person got divorced. Okay, means a person is again single. Whole year the person is single, but on the last day, the marriage date is on 31st December. On this day, they are legally married. Then they will be called as married couples, and they can go for joint return. Okay. So first filing status is single. You need to check at the end of the year. That is 31st December. Joint return needs to be also checked at the end of the year. If a person are married at the end of the year, that is on 31st December, living together in a legally recognized common law marriage, or married and living apart. Okay, even if a person is married but they are not living together, they are living apart in a separate states or city or country due to some work reason or anything. Okay, still they can go for MFJ. Now, if they are legally separated, means let's say the person are divorced and they are living in some other different states, city, country or anything, then they will not be called as legally married. Okay, understood, guys, everyone? In order to file a joint return, the parties must be married at the end of the year. They should be living together in a legally recognized common law marriage. Okay, now even if they are not living together, that's fine, but they should not be legally separated, right? So here are some points, you can just read it. If a married during the year, joint return may be filed, provided parties are married at the end of the year. So as I mentioned, the whole year like they both are married, but at the end of the year they are divorced. So they can't go for MFJ filing status. Clear, guys? Now, if a divorced person, like they are divorced during the year, a joint return may not be filed. They will have to file a separate single returns. If one spouse dies during the year, joint return may be filed. Okay, this thing we will understand in a very detailed manner, because all the MCQs, see, wherever it is important, I'll mention it in the class only. That this topic is important, and from this topic, this kind of MCQ can come in exam. Okay, all the MCQ from this topic will revolve around this thing, this topic. Okay, what this topic is saying, what this line is saying actually is, let's say Mr. A and Mrs. A both are married in 2022. Okay, in the month of June, Mr. A died. So can I say on 31st December, I won't be able to analyze the status because one person, the taxpayer, has died, but the spouse is alive. Can I go for single filing status? No. Ideally, if I look at the law, like it was not anyone's mistake. They both were actually legally married. So what she will say, I want MFJ status only. Why? Because in MFJ, the highest standard deduction is there. right? Why I should go for single filing status? Why I should go for $13,850 of standard deduction? Okay. Yes, Nagraj, joint return can be called as MFJ. Okay. So always remember that this is an exception. If one spouse dies in the year on 31st December, only for the year of death, you can file a MFJ. Okay. They can file a MFJ in the year of death, that is 22. After that, for 23, now let's say you're filing a 23 return. What Mrs. A can do, she can have two options. She can go for a qualifying surviving spouse status, or she can go for a HOH status, or she can file just a single. Okay, she have to analyze these three things. Now remember, in QSS you should always have a dependent. That dependent should be your qualifying child only. Other people's child will not work. It has to be your own child living with you. Okay. And should be, you should be bearing the expenses. Mrs. A should be bearing the expenses of the child's living and everything, the basic needs. Okay, that we will see. But always remember, in for taking the QSS status, you have to have a qualifying child as a dependent. The brother's son or brother's daughter will not work. It has to be your own child only. Okay. After the date of death, okay, the date of death was what? 2022 was the tax year, the date of death. Okay, year of death. After that, for 2 years you can go for QSS if this thing is fulfilled. Okay, so can I say 2023 and 24 tax return can be filed with the filing status of QSS, qualifying surviving spouse? After that, still this child is your dependent, or let's say you have some other dependent, you can go for HOH. Okay, we will see the criteria. QSS and HOH will have a similar criteria, but before that, we will understand the meaning of qualifying child and qualifying dependent. Clear, guys? Comes in the category of qualifying child. Yes, if the adoption should be done when you were married, when these two were married and they adopted the child, so it is their own child, right? So that adopted child can be done, can be allowed. But adopted child from your brother or sister, they will come in category of qualifying child or not, that we will see in the QC status. Okay, there is a whole criteria of a qualifying child status, there we will see it. Okay, always remember the child should be owned. Now if a person, the child is adopted child or foster child, okay, then you need to check when these two were married, at that time the adoption was done, or at that time the foster child was adopted. Okay, then only he or she can go for a qualifying surviving spouse status. Always remember, like, see, in previous batch there was one mistake, like everyone was thinking like QSS means always a female. No, it can be a male also whose spouse has died, and he can go for QSS status. Okay, so I'll give you one MCQ, like, just let me know the answer. I'll just put down here one question. Mr. Ben died on 6th of June 2022. Okay, so Mrs. Ben can file what kind of return, what filing status in 22, 23, 24, 25. Okay, they both are having a own child. They both have own child whose age is almost less than 18 years. Okay, and like, just taking the assumption all other criterias are fulfilled, just mention in the chat box for 22 tax year what filing status they will file, 23, 24, 25 what filing status they will file for all the 4 years. Okay, for 22 MFJ, 23, 24, 25. Yes. And other people, what are your answer? Shahid has mentioned 22 MFJ and rest all as a QSS. Okay, great. So, I think Sandeep, you have answered a little bit different answer. Yeah, Zeba, your answer is correct. See, always remember that in the year of death, they have the option to go for MFJ. Okay, in the rest of the 3 years, they can't go. The limit is only 2 years, maximum 2 years you can go for QSS. Okay, in our example, the person is having their own child. If I make here some changes, this is not the own child. Their brother's son is living with them. He is not their own child now. So this spouse cannot go for QSS. They don't have their own child. Then they have just a qualifying dependent. They don't have a qualifying child. So this 2 years they can go for HOH only, not as a QSS. Okay, in that case, always remember to read the question twice. The question will always make you confused. One reading is not enough. Read the question twice or thrice before submitting your answer. Okay, the result will come on the spot. As soon as you submit all the 100 questions, the result will come on the spot. If you miss even a single line, only a single word, the whole answer can go wrong. Okay, so this is the married filing joint return status. Next one we are going to understand is married filing separately. This is very simple. If a person is married, okay, but they want to file a separate return. Okay, it is not compulsory that a married person should go for MFJ only. They can go for a separate filing status as well. Okay, so if they want to go for a separate filing status, they can file a MFS. But remember one thing, in case of MFS, you have this standard deduction limit is very much lower as compared to MFJ. Okay, that will be the same as a single taxpayer, that is 13,850. And uh, they will have to mutually decide. If one taxpayer is taking standard deduction, other will also have to take standard deduction. One is taking itemized deduction, other will also have to take the itemized deduction. Else, what will be the loophole, guys? One will take standard deduction in the return, but the other will take the itemized deduction for all the personal expenses incurred. Okay, so that thing is not allowed. For MFS filer, you need to mutually decide what kind of deduction you want to take. Okay, second thing is the community property state. Now, what do you mean by this? I'll just explain a few glimpses of it, and we will see that in the gross income chapter. In case of alimony also, here a person get married. Okay, to the taxpayer and the spouse got married. Just before that, whatever property the spouse is having or the taxpayer is having, okay, they are going to be considered as a separate property. They will have their own ownership. But just after marriage, okay, any property which is newly purchased either by the spouse or by the taxpayer, this will be considered as having equal rights for the taxpayer and for the spouse. Means, let's say the taxpayer has only paid the price to purchase the property, but still it will be, if you are located in a community property state, there is a list of state which follow the rules. This kind of rule, that whatever is this new property purchased, if you are married, it will be considered as a having a equal right. So at the time of having a divorce, or in case if you're filing a separate return, any income which is generated from this newly acquired property will be allocated between both the people, both the taxpayer and the spouse equally. Okay, it will be split 50-50. Got it, guys? We will understand that when we do the this alimony paid topic. At that time, we'll understand this clearly, right? In separate property state, spouse who elects filing the MFS status must separately report their own income. Okay, own credits, own deductions, everything will be separately mentioned if you are located in a separate property state. Okay, but if you are located in community property state, first each and everything will be accumulated and it will be straight away split by 50-50 on. Okay, except wages. Okay, wages will come in your own name. Let's say I am working in a CPA firm, but my spouse is working in some manufacturing unit or some other industry. We can't accumulate the wages and divide it by two. Whatever actual I'm going to earn, the W2 will be shown separately, the wages will be shown separately, rest all income will get accumulated and it will be divided by two, all the deductions, credits and everything. But if it's a separate property state, each and every income, deduction, credits will be shown as per the actual individual's income. Clear, guys? I hope this one is clear. In MFS, we will see that there are so many restrictions. If you're going to opt for MFS, you can't take certain credits. You can't take the credits which are child related credits. Okay, you can't take certain deduction. We will see the list later on. First, understand the basic criteria of the filing status. Okay, QSS is very simple and that should be a dependent child. As I mentioned, your own child. You can take the status for how many years? 2 years after the date of death. Okay, so a surviving spouse is a taxpayer who may use the joint tax return standard deduction, because if you guys remember the limits, standard deduction limit, QSS limits and MFJ limits are same. It is exactly the same limits, that is 27,700. Okay, so the rates can be beneficial for the surviving spouse after the date of death. But remember one thing, here, if the spouse remarries some other person, this status is not eligible for that thing. Okay, let's say Mr. and Mrs. Ben was there, okay, in our example. So after date of death, in next year, if Mrs. Ben marries to some other person, right, then she can't go for surviving spouse status, but she can go for MFJ with the new spouse. So this kind of twist and turns they will do in exam, right, to understand, like to analyze the filing status. Just read every time when you read the question, read it in a storytelling format. Okay, they are asking us like this is the scenario, what they should opt for. Either it should be surviving spouse status or HOH status or a single or MFJ status. Clear, guys? Next one, it is saying that the rates will be beneficial for them for the 2 taxable years unless she remarries. He or she, okay? Here only the word she is mentioned, but remember one thing. In previous batch, few people got confused that the spouse can only be a surviving spouse. The female can only be a surviving spouse. That is not true. Even the male can be a surviving spouse. So please read the question carefully every time. In the event of remarriage, the surviving spouse will file a tax return that should be joint or maybe separate with the new spouse. Okay, clear, guys? See, MFJ, MFS, and qualifying surviving spouse is clear for everyone. Now, in QSS, there is one small criteria that there has to be a qualifying child along with the spouse. Okay, and that qualifying child should be dependent child should have the principal residence with the spouse only. Means wherever the spouse is living, he or she should keep the child with them. The child should be living with the spouse. Okay, except for few conditions. That is, the condition is if a child is in some hostel for education purpose, so that is fine, that can be called as living with the spouse only. So the surviving spouse must pay over half of the cost of maintaining the household. Now always remember, there will be two terminologies in our qualifying child and qualifying dependent topic. One is cost of maintaining household, and second one will be support test. In support test, you have to pay the cost of maintaining the child. Now, maintaining the household means what? It will include all the expense which you are incurring to maintain the house. Like you are paying the rent, you are paying the taxes, you are paying the mortgage interest expense, okay, food, clothes, food consumed in house, clothing, everything will come. But child's medical expense, that will not come. Child's insurance, that will not come. Child education expense, that will not come. Because they are using the word maintaining the household. Only the expense related to the household will come into picture when you calculate the 50% is paid by you or not. By the spouse, the surviving spouse is actually paying the 50% or not. That will be decided based on the cost of maintaining the household. So all the household related expense will come into picture. Okay. Second thing. Second thing, for QSS status, you need to check that person is a qualifying child, plus cost of maintaining home, plus the child is living for the whole year with the spouse. We will compare this when we see the HOH status. There you will see that in HOH, the condition is even if you live for 50% of the year, okay, even if you live for half of the year, 6 months, okay, then also the person is eligible to take the HOH status. But here, for QSS status, the child should be living for whole year. Mark my words, they will twist the whole question based on this thing. The whole year is the criteria, and maintaining the household is the criteria, and own child should be there. Clear, guys? This three criteria is properly fit in your mind. It's very clear for you. Okay. Next is the dependent child must be a child or a stepchild of a surviving spouse. Now, can anyone tell me the difference between stepchild and foster child? Okay. Foster child is not allowed. Stepchild is allowed. Adopted child is allowed. Okay. Stepchild is someone, let's say mother and father, either of them are the biological parent of the child, okay, and they are again remarrying to someone else, and then the child is still living with the mother, she remarries to someone else, okay. So for this father, the child is not a biological child. So stepchild is something that is called as, like, either one should be the biological child. So stepchild is allowed to be called as a qualifying child. Adopted child is allowed to be called as a qualifying child. Foster child, why it is not allowed? Because foster child is, like, none of the parent is the biological parent in case of foster child. Okay, they are legally being, adopted by some of the this home care facility or something like that. Okay, that should not be a foster child. Adopted child will work if it's the child is legally adopted. Always mark, like, always see the wordings in the question. You will have to see the wordings, whether it is given as adopted child, yeah, that is fine. If it is given as a stepchild, yeah, that is fine. If they are giving you the word as a foster child, that is not allowed for qualifying surviving spouse status. Okay. And the third thing they will confuse you is whole year is the criteria. Only the exception is if they are living at some other place for education or due to some medical reason, that is fine. But apart from that, the child should be living with the spouse for whole year. Clear, guys? This much is clear, I hope. Qualifying surviving spouse, MFJ, MFS, and single status, these four are clear. Tomorrow we will start with the HOH status and the definition and the whole criteria for qualifying child and qualifying relative. Today I will be sharing a Google Classroom link, where this today's recorded session will be there, and MCQs for this four topics will be uploaded over there in the Google form. You can just, whenever you are ready, you can appear for that quiz, submit the form. You will get to know like how much you can do in the exam based on the today's session. Without reading, just based on the today's session, just go through some basic reading of the topic, okay, and appear for that MCQ from the Google Classroom. Clear, guys? Those who are going to anyways enroll in the batch, okay, you don't want to wait for the next two demos, you want to enroll in the batch, you can just ping me over WhatsApp regarding the enrollment process. Rest, other people like who want to still go through the next two demo sessions, they can wait for next 2 days and then enroll later on. Okay. So any question from the today's session, guys? Anyone? All right. Thank you, guys. We will meet tomorrow again at same time. Can I please have, okay. I'm sharing the WhatsApp number in the chat box. Those who are in case not having the WhatsApp number, for them. Okay. Fourth year will be a status for above example. Yeah, Nagraj, fourth year will be HOH because the person is having their own child. Na? So at least one dependent. For HOH, tomorrow we will understand the criteria. Then you will able to get to know why I'm saying HOH. Okay. EA should be completed in 2 years, guys. But if you enroll at our institute, we guaranteed 6 month time period. Within 6 months, you can easily get through your all the three paper exams. Okay, when the slots are open, so from May you can count the 6 month. Within that 6 month, you can easily clear all the three papers. If you're enrolling for all the three, we guarantee this much time period. Okay. Yes, from 2 years from the date of passing the first paper. Shiv Chandra, yeah. You're asking the question in the personal chat box. So for you, I'm just saying, and for other also, if you're clearing the exam right now in the May 2024, from that 2 years you need to count, means till 2026 you need to complete your or rest of the two papers. Okay, then anyone is having any doubt, you can just ping me over WhatsApp. Okay, and for enrollment also, you can just ping me over WhatsApp, or after 3 days you can enroll after completing the demo. Okay, thank you, guys. Have a good day. Bye.
Bye, ma'am. Thank you.